Hey, this is Sasha, and welcome to another episode of Let's Talk Stocks, episode number 171. And in today's episode, what I'd like to do is share with you some insight on what's going on in the marketplace, in the economy. We'll take a look at some inflation data, some big bank things. We'll look at some of the cryptocurrencies, what's happening, and then we'll also take a look at some stocks, how they're doing, how they're performing by the charts. So that's what we'll kind of cover, and I'll give you some insights on my personal take, my opinion, and how to really see the other side of the coin to some of this news and some of this data. So first things first, I want to give you an announcement. Remember, we do have our sale and promotion when it comes to our passive dividend investing course. You can go to our course's website, which is Rise to Learn with the number 2. And that's where we have all our video course material. The Traders Fly website is for the free content and our members for the charts, for critical charts. But all our courses are on Rise to Learn. It just makes things a little easier to split things up. So in either case, if you go to the passive investing section and you go to the passive dividend investing course, you'll see that right here, this course is really packed with a lot of modules and a lot of information. 14 modules over 12 hours long. It's on sale. It's on discount. If you miss the sale and discount, just like at any regular store, well, then you miss it and you end up paying higher prices, right? So in either case, take a look at this if you're interested to learn about how dividend investing works, how passive investing works, how to invest for the long haul. If you want to learn how to choose stocks the right way for the long haul, for your retirement, how to get a percentage of those dividends time and time again. So that's what this course is really all about. I'll share with you some scanning tips, finding tips, management tips, and how to hedge those positions as well in case it starts to go against you. So in either case, let's take a look at some inflation data. This came out from most news sources. It was probably the biggest thing this week so far besides the sell-off. When you look at the inflation, it basically stated that rose faster than expected in January. They say that it's more good news for Main Street. It's more bad news for Wall Street. U.S. inflation came in at 2.1 in January compared with a year earlier, another sign that wages are rising for workers. Now, it's not important to understand what the article is saying. What is important is the depth of what's actually happening. So they say it's good news for Main Street, bad news for Wall Street. And you have to understand what is going on when we say inflation came in and what does it really mean when wages are rising. So they say that for the regular people, this is good news, right? So it's good news if your wage goes up, right? That's what they're saying. It's good news that when you make more money, it's actually good news. This is what the media is spinning. Some media outlets actually spin it the other way. And the reason is when you look at it from one side of views, hey, this is good for the regular person. He's making more money so he can buy more things. Now, keep in mind what really happens, and I'll give you an example. Let's say my accountant, as they manage my books from the business that I have right here, educational business that we have and sell products and material, as they raise their rate from, let's say, $100 to $200 or $200 to $250, what does that mean? Well, that also means that they're making more money, right? My accountant is making more money. Now, if they've raised their rates, well, how do you think now, what does that do to the business that they're dealing with? Well, now it makes me think, well, I should raise my rates. Everything is now rising, right? So as I raise my rates, now my products become more expensive. Then the person looking and dealing business with me, or my employees, they say, well, he's raising his rates. Well, I should raise my rates. Hey, you need to go ahead and give me a bonus or a rise in wages because otherwise, well, I don't want to work for you anymore. So again, now those rates get raised as well. So everybody's wages then, as they rise with time, and of course it doesn't happen in a weekend, but as that happens, well, now the products, right, because I have educational products, but what about the cereal boxes? What about the gas prices? Those also rise with time. So inflation, this is really what happens, is it actually lowers the value of money. It makes money more useless. It makes money less valuable. So that's why cereal boxes in the past would maybe cost 20 cents, 50 cents, and now they're $2, $3. And even they've been playing tricks on you. For example, when you had those big cans of soda, right? And now you go to the mini size cans of soda. So, hey, it's better for you. You drink less, you lose weight. It's better for you. But the price didn't really change much, right? Maybe a few pennies here and there, but they shrunk it by half. So that's really what inflation is. It just means prices continue to go up. And even though you may think you're making more, as far as the dollar, the absolute dollar amount, $100 million in your bank account doesn't really mean much if all you can get with $100 million is a box of cereal, right? So think about that for a minute. So anyways, they say it's good news. For me, I think, inflation's going to happen. It's just part of life. But the reality is remember, everybody then slowly starts rising and raising their prices with time. So keep in mind that this is what happens with time. And if it rose faster than expected, that means your products that you're buying at the superstore or the market, the food store, it's going to slowly rise again as well. So just keep your eyes peeled and just see what happens. That's just part of economics. When you look at also another headline here, big banks got huge tax cuts, then hiked cities' interest rates. So imagine this. Hey, you get a tax break and now, hey, well, we're going to make more money. I mean, they're in a business, right? So think about it. They're in business to do what? To make more money. So what are they going to do? If they get a tax break, they're looking out for themselves. Remember, these companies, a lot of these corporations, they're not a one-on-one business like a retail guy or a mom and pop store. They're not out there looking out for your back. They're looking out for their number one is them, right? Survival of the business. Number two is their shareholders. Number three is their operations, their business. And of course, if you dig deeper, it's really their own skin in the game. It's really that person individually. But the last person on their mind is really you, your money, your family. They don't really care because they're so big. There's so many pieces involved in it that they're not worried about that. They need to hit earnings. You look at any major corporation, the big S&P 500 companies, they're looking at how can we hit earnings? How can we please shareholders? Because otherwise their stock is going to tank. And most of these CEOs, they don't get paid on an hourly basis or a salary. The majority of their income and salary comes from what? From the shares that they get, from the stock price, from the bonuses that they get through the stock. So they're always looking to prop up the stock price. Anyways, it's the same thing happens with, you take any business, Walmart, they announce raises and bonuses, and here it'll cost them, what did they say, 300 million, 400 million? So 300 to 400 million it'll cost them. But why do you think Walmart is doing this? They have one of the highest turnover ratios of employees. Employees quit, they have to get new people, and it's very expensive. It's more expensive than giving them a little raise or a little bonus. So basically they say, hey, well, we're going to increase it. It's going to cost us 300 million. But when you really look at some of the numbers, I don't even know if this is accurate, but let's say the estimate Walmart is going to save is around 2 billion in taxes under the new plan. So what are they really looking for? They're trying to please the employees. They can say it's a benefit from the tax cut, but really the reality is they're trying to reduce their churn. They're trying to reduce their turnover ratio with hiring because that's really expensive. Time commitment, involvement, and liabilities when it comes to employment. So whatever the reason is, you could blame it on tax cuts, you could blame it on something else. This is what they're trying to do, and they're taking a fraction of that money that they're actually going to save and trying to, improve their company a little bit. And that's the goal with many of these companies who really are looking for saying, hey, we're doing this and this and giving our employees a break due to tax breaks that we're getting. Really, there's always that underneath lying thing that's beneath the surface. Some of them are going to probably do a lot of buybacks with the shares because then they'll have more of their shares ownership, and as that company grows, they'll have more value within that as well. So think about that in a bigger context or a bigger point of view. Here's also looking at some cryptocurrency things. Again, you look at some of these Bitcoin scams and crypto things. Again, more millions of dollars stolen from these different blockchains. So if you're trading these things and you're trading Bitcoin and those kinds of things, I've talked about this in the past in a blog or two where a lot of these things are just trade. You're trading them short term, and maybe you could throw $100, $1,000 in it and see what happens and see what sticks. But the reality is right now there's no sustainability behind them. They don't have like a product or a service that'll grow over time. If more, let's say, gas stations start using them and those kinds of things, if that ends up happening, then in that case, this could evolve. But the reality is it's difficult to use. It's difficult to understand. You don't have a lot of old people that are going to be using this. So it's kind of tough to break it into the world economically. Of course, if you look at drugs or crime lords and things like that, they use this to send anonymous money. It might be a great benefit for them. But as far as, everything else, it seems to be working out really well for the digital thieves to steal a lot of the money. So right now it seems to be working out well in that case. So I would say be very careful what you're doing here with if you're trading any Bitcoin or cryptocurrencies or anything like that, digital currencies. Anyways, let's take a look at some stocks and some things that are happening here in the marketplace. We had a pretty large sell-off here. When we look, I'm going to use, this is TradingView. You could use TC2000, but here we had a little pop right now. I wouldn't be surprised. This will be about a 50% pop and retracement if you look from the lows to up here to the highs. If we get about 50% right here and reject, this is quite possible. Simply because I'm also noticing this volume slightly dying out. So it wouldn't surprise me if we get a couple of more follow-through days and have a little bit more of a rocky next month or two, couple of months, simply because of all that energy and the sell-off and the panic there, right? So don't think that it's all over now and it's done, the sell-off happened. Keep in mind that these things could follow through further. It always takes a lot longer to climb up than it does to fall down, right? Think about skydiving. How fast does it take to fall off a plane and land on the ground versus how long does it take to climb a mountain? Long time. So same thing here. It'll take a little bit of time to get back here, and you'll probably see a couple more red days coming up. But things seem to be stabilizing a little bit. I found the option prices, especially during these few trading days, was very volatile. It was tough to get execution that was at a good rate. So that liquidity there was a little bit of a problem for good execution. Anyways, so that's kind of the overall market that I'm looking at, is just watch to see how this comes in, and is it going to reject? Because that's my concern right here. Is it going to reject right here, and are we going to roll over? 2760 could be a line and level to watch. So see what happens right there. And then you'll see how this digests, or if it's going to play in here for a while. And then again, you could break out higher, you could break down lower. I mean, the debt just keeps stacking, so we'll see how it plays out. But overall, this is the market. If you look at individual companies, the same thing. You're watching some of these levels. Are we coming in right here at some resistance levels? So right there, are we coming in? Are we going to reject it? Right? They're popping back from that sell-off point. You look at Amazon, for example, 150, 200 points, popping back from its lows. But again, are we going to reject it? You look at Apple, also coming back with some force. The problem and the concern I have here is you look at this, the volume there versus the volume here. It has me a little bit concerned over what's going on and what's happening in the stock. So yes, it's back in this level, and can we play in this range here? Yeah, absolutely. But the volume is kind of weak. So I wonder if it's the buy the dip people or the short-term people getting back into it, and I wonder if we're gonna pull back again a little bit. You know, look at Facebook here as well. We had a little pop recently, but now it's kind of isolating right here for today. If you look at kind of the weekly here, you can see we're still holding up fairly well, right? We're still holding, when you look at this, we're still holding kind of in this little range right there, 190, 175. But if this starts to break down, you're going to have some issues. You're going to have some problems. Let me see if I could pull up the TC2000 platform. I like this one. If we start looking at, let's say, Facebook right here, and you start looking at all these charts, right? You got all these momentum charts of Apple also. When you look at this and you say, hey, well, can this stock get back under right here and bounce? It's possible. It's possible. The other thing, let's see here. What's the other one that I was looking at? McDonald's. Here we go. McDonald's. You look at this one right here. You look at this upward trending line that we've had for quite a while is now breaking down, right? So this is what you're kind of watching in a lot of these stocks is, hey, we're moving and we're breaking some of these key levels, and now could the momentum start to reverse? It's not going to happen in a day, right? These things don't happen in a day. But you can see how the momentum is starting to pull back. Now, is it a start of something bigger? I don't know. You know, you really can't tell till things start to pick up and accelerate, but you start seeing little cracks, and, you know, the debt starts getting bigger, and, you know, all these things coming together, and eventually it just picks it up, and then before you know it, you're in a recession. So this is kind of what you do, is you start looking at this, like Bank of America also. Look how fast this thing ran, and look, we're coming right into some trouble areas again. You know, I don't want to scare you or alarm you. I mean, things are still looking okay, but I'm just showing you that, hey, if you're watching this, look at the overall picture of some of these stocks. And when you look at some of these stocks, let's see here, P&G here as well. Okay, so you look at the weekly. Look how they're breaking down, right? You have these support levels, and then you have the rejection. Here's a 2015 rejection, and you look, we're coming into 80, right? So the next stop, you have some at 70. So does that mean it could come here and then come back down, right? Because stocks don't go straight down, they don't go straight up. So if you go in right now and you'll get a few nice days, you come back up, it's going to feel good, and then again you go lower, and then again you go lower. So this is what you kind of watch within these stocks. Johnson & Johnson, the same thing. Look at this one, competitor to P&G, again upward trending, boom, big break. So as you evaluate some of these things, start looking at those underlying things. You know, what's holding up, what's not. Google here at 1,000 is holding up, but again, you look at this volume, and it's weaker than the sell-off volume. So again, yeah, can we go up here and get into this moving average? Absolutely. But then what's going to happen? Are we going to be able to hold this $1,000 level, right? Are we going to sell off? Now, volume can build with time. I will tell you that. Volume can build. It'll take a little bit of time. But you're watching to see if these dominoes start to fall together, right? So if you got one that goes, then the second one, then the third one, then the fourth one, then the fifth one. As they all start to go together, this slowly becomes a bigger and bigger problem. And then eventually the speed just accelerates in a big way. You look at this one, Autodesk, same thing. Right there, we broke it. Here's the rejection. We're trying to come up again. And we'll see, is it going down, or are we holding that support right there? And now are we heading higher? And that's what you do as a risk manager. What's the potential? How high are you? How far can it go? And what can it do? So those are some stocks, you know, watch some of these big ones because they're going to tell you which ones are moving well, which ones are not. And it's going to give you some underlying concepts to the overall economy as well. Just when you watch some of these big overall big companies. That's what they do is a lot of people have investments in these. So as things roll over, you know, you have more of them that start to roll over, it becomes a problem. For now, things are holding up. They look okay, but the volume on the bounce looks a little bit shaky. It seems like some people are a little more nervous now getting back into the market with that little bit of a shakeout. So we'll see. Could continue running another year or two, but again, we haven't had a recession in a while. We haven't had major pullbacks in a while. This is still minor compared to the bigger picture, so you need to be very careful with how you trade, how you plan your trades, and your investments. Anyways, I want to thank you so much for joining me. Keep in mind, we still have that course on promotion and on sale, the Passive Dividend course, so be sure to check that out if you have a moment. If you want to get announcements and updates through YouTube, hit the subscribe button right here, this circle, and you'll get notified as we release new content and material on YouTube. But if you want to get on the newsletter list where I send out some private messages along with some of the new promotions that'll come out or any tips that may come out throughout video, then be sure to get on the newsletter list by clicking that button right over here. Anyways, thanks for joining me, and I'll see you next time.